live. Boom. There it is. The internet is great.
The internet is great.
And Steve Ploetz is here, ladies and gentlemen. We're here to talk about...
An internet advocate here.
An internet advocate. Since the early days, since the late 90s, he's been into it. So we have a couple things to discuss here. And we're going to start with this RedfinNOW situation,
which I have some personal experience with. Yes.
You have some recent experience. We've actually been waiting to do this segment until a transaction came to fruition in which you were dealing with. I'm going to set this up because I know you would take too long. So basically what happens is Steve has a client. They are going to sell their house. Mm-hmm. They call Steve to list the property. But at some point, they're online, they're clicking around on Redfin, and I have it on the computer right now if you want to show it, Carrie. This is the actual screenshot that they sent you, right, of what they were seeing on RedfinNOW, which is basically saying, hey, sell the RedfinNOW, hassle-free, no repairs, no showings or uncertainties. Here's the estimate of the range that we'll offer you for the property, $589 to $661. Now, this particular property, you had done some research, talked to an agent on one that was already in escrow, close to closing. You said, hey, give me an idea here. And they were telling you is a model match, right? That you were saying it was right around 580 was what you were expecting. It. That's what you were able to decipher from the agent was right around 580. They're going to be closing in that range. So you now have a situation where this client who's hiring you to sell their house has potentially Redfin offering them more than what's going to be the most recent comp here very soon. So Steve goes ahead and tells the clients, you should continue to investigate this. March down the path. Don't tell them I'm involved. I won't be involved, but I want to know what's going on. So you essentially sacrificed a client here, laid on a grenade for the show so we can bring some hardcore, this is serious journalism, man. You may as well be in Afghanistan getting shot at. I mean, this is amazing. You threw away a big paycheck on this. Now, what we were able to come up with, though, because I will begin with the end in mind a little bit here. Redfin bought this home from this client.
Yeah.
So, you know, when I saw and heard about this RedfinNOW program, I thought, well, this has got to be some sort of investor thing. It's got to be a lowball deal. It's like the guys on the radio saying, hey, if I don't sell your house in the next 30 days, I'll buy it from you.
Yeah.
For 75%.
You got it. All the same shtick.
That's what we thought. But that's not what happened in this case. What actually happened in this case, real live case of a client that you gave up because you thought that the amount that Redfin was offering them for their home was more than it would sell for in the market.
And so I'll fill in a few gaps here. That was a very good, succinct version. I will be extremely succinct. I met with them in September of 2018, and they said, these are lovely people, wonderful clients, referred by a past client, and they said, we're going to sell in the spring. So I'm going to tell them what my opinion of the value is now being September, and then I want to stay in touch with them, and so I'm staying in touch with them, and as we all saw in the market changed significantly. September, October, November, December, the market got beat up, as you predicted.
Yeah, okay, I'm right, and then continue.
You're right, and then we'll get to the part where I'm right. And so I'm staying in touch with them, and I started, and I said, September, 629. And then kind of October, hey, I would list it 619. Hey, all these different things, hey, maybe 609. I want to stay in touch because what I don't want is I'm telling you 629 in September, and then all of a sudden when the time we're ready to list it, hey, the market has changed, and here's a big punch of what's happening.
And it's 580.
And it's 580. And so I want to stay in touch. And so they were seeing what was happening in the market. Then this model match comes on the market at 629. They don't sell. They reduce. It's an agent that I knew I have a relationship with. And so I called her and said, what's going on? And she said, 580. So I was going to say my clients. They're not my clients. The sellers.
Ended up not being your clients.
Ended up not being my clients. But the sellers, so we talked about it, and I said, go down the path. They click on the button that says Redfin will write us an offer, and they submitted an offer. And I said, hey, don't tell anybody that I'm involved. I'll look through this contract with you. Let's explain the risks. Here's how Redfin wrote it. 60-day escrow, no earnest money deposit.
No earnest money.
0 earnest money deposit.
And 60 days is a little longer than normal.
60 days is a little longer than normal. 600,000 cash, and
No financing contingency.
no financing contingency. But they had a couple of odd things that were in there. Things like, hey, if the seller doesn't remove their personal property, that then there'll be a $1,000 fee. They did a nice CYA job of explaining, hey, we might put this property back on the market. The seller understands that by accepting this offer and not going into the MLS, that potentially they're leaving money on the table, et cetera, et cetera. One of the things that is interesting is, and so we explained what are the challenges. The challenges of the way this offer is written: no earnest money deposit, they can go 59 days back out, contingencies, no contingencies, whatever. They back out, there's no money.
Yeah.
So then you're left holding the bag, and their hard stop was, we got to be out by June.
So was there any agent commissions involved?
So, good question. So they don't have any, so RedfinNOW specifically says, we are not representing you as the seller. You're representing yourself. We do charge a 7% convenience fee. Actually, they call it a 6% convenience fee and a 1% risk fee. I don't know what the hell a risk fee is. I don't know what the hell a convenience fee
So
is.
instead of charging you
Exactly.
as a seller, a 6%, which would be kind of full price standard, it's actually 7%.
Right.
So you have to factor that in.
Absolutely. And with them, I had a full commission in our discussion. And so what we see is we see the market changing, and now I know the property that it was in escrow at 580 was listed 599 to 619. So to the average consumer, you could go, well, maybe they got in their range, maybe they got 610. Something like that.
Yeah.
So 600,000 minus the 7%, okay. At 580 though, purchasing it at 600,000, even with all the convenience fees, et cetera.
That's a model match comp.
Model match comp,
That was-
and the
that
other
was
one has
pending
that was pending
when
The
this
other one-
went down.
The other one had a view, and it's right. I don't have that good of an arm. I mean, deep in the hole I can gun, but I could hit it with a tennis ball. It's like it's right. It's, oh, there it is. Gotcha.
But has a better view.
Has a
Model
better view.
match, floor
Model
plan.
match.
Condition similar?
Very similar.
Okay.
My opinion, the property that I'll again say my clients, just as a description, they're not my clients, but my client's home, the interior was slightly better, but pretty similar.
Very similar. Okay. And that one, so it did end up closing 580.
The one
comp.
across the street, yes.
comp.
Interestingly, closed this. So I know you want to.
Hold on. Stop. So 580 for that close, the comp, the model match comp was 580 with a slightly better view. What was the offer, the actual offer? Because Redfin gives you an estimate, but then once they started clicking through and they got, as you said, the offer came over, the 7% with the convenience fee.
The offer was 600,000.
600.
Is what Redfin offered. Again, I'll say my clients and so that was the discussion that we had. The way this is written, as this is me talking to them, the way this is written, it's too long of an escrow. It's 60 days. They're going to see the other one close escrow. You need to close before your neighbor closes at 580. My expectation, and I didn't know what their plan was, the Redfin's plan was, and so we hashed those out. Maybe what they're going to do is they're going to get into escrow and then they're going to try to renegotiate with you and say, hey, you know what? We thought it was worth 600, but really what we need to do it at 540. Will you do it at 540? That was one option. Hey, let's be ready for it. 60 days is too long. You got to shorten that. Second option, I had thought, maybe Redfin goes in, then they change their mind within escrow, and they send in their star lister to go, hey, I'm sorry that didn't work out, but we're listing it for 1% as a backdoor way into get a listing. We also had the conversation like, but this can't be their MO. They can't have a program that's like this purely just to bait and switch.
No, there's no way.
Because if that was their MO, the word would get out quick
Very
that this
quick.
this is a bad deal. So the recommendation that I had told my client, again, not my clients, but I'll just, from here out, we're calling them my clients. The recommendation I made to my clients was change the close of escrow date. Change it to 7 days and do a lease back. Don't worry about the earnest money deposit. Yes, in the perfect world, you'd have an earnest money deposit, but it's too obvious that you have a hired gun in your back pocket if you're talking about earnest money. So play the naive home seller. Oh, totally forgot.
Because at this point, you don't know what is going on.
Right.
You don't know what Redfin's game is with this. We don't think there's any bad intentions. You and I met for lunch. We discussed it while this was in process. We didn't think there was any bad intentions because, again, Redfin is too big of a company to go out there and try to screw people over.
Right.
But we figured there was something, there had to be something there. And so you're kind of just saying, hey, play dumb a little bit. Let's see what happens here. Let's see what the...
Let's go down the road.
Can we get to the bottom of this? Like,
Absolutely.
what is the actual purpose?
And so there was another, so then we started to do more, we started to gather more data. And Redfin on their site, and even to this day, I checked this morning, for that property, the Redfin estimate, or whatever they call it, is like $660.
No, I have it right here. Carrie, if you want to pull it up. This is the actual prop. So this is the subject property that was purchased by Redfin, right?
Yes, so this property has closed escrow at $600,000.
Okay. So it did close escrow, so there's spoiler alert. It did close at $600,000. So you basically gave up the deal because your clients got an offer that you thought was significantly better than the market.
Better than market. Had we listed at market a model match that's basically from where this photo is taken, like the picture that we see, the guy that is snapping this photo is standing right in front of the model match.
Here's the model match right here. This one, so you can see, sold for $580. Now this one here, the subject property that we're talking about, hasn't been updated yet on the Redfin site because it was last sold for $600. But maybe they're not putting that information in when it's a RedfinNOW
there's
purchase.
More it's still
you know what
developing.
I mean? That's also interesting. Like, why didn't they? Because that's done. Why wouldn't that be corrected unless they don't want you to know for some reason? I don't know. It's really very interesting. So, but here's the model match.
So, and
you can see it's in very good condition. I mean, look at the difference here.
Yeah.
You know, I mean, this is obviously not a great photo, and that's the only one I have.
Yeah.
But this is obviously a really nice one, very similar. But also notice the Redfin estimate on this one was lower.
$595. And go back to the property.
Now look at the Redfin here. This one has closed. It was purchased by Redfin and closed for $600. You can see the Redfin is $587
and
to
scroll up
$659.
to the Redfin estimate. They say $652.
So that is really interesting because
which I think shows the fallacies of these pricing
estimates.
algorithms.
Yeah, they're just a guess. Okay, let's look at your build. Did you look at that? Okay, 1988.
They're the same complex. They're the same
89.
everything. It's the same community. They're across the street, and the street is just.
I'm just trying to find something here.
I mean, to explain to me how the same house, this house, of course, has the view.
This is nice.
Is $60,000 less?
I mean, this one's. Look at that.
Yeah. Looking, what is that, southeast?
So I prefer to be the buyer who got this one for $580.
Absolutely.
Than to be Redfin who got the other one for $600. We also looked up to see how many properties they purchased in San Diego. Or you looked it up.
Right.
And 30 something.
And Redfin in San Diego County, they've done something like 30 transactions. Interestingly, I looked at a property also in Vista, in Shadow Ridge, that turns out, and they're disclosing, seller is Redfin. Redfin is an owner. And that property, Redfin purchased higher than they're trying to sell it. So they had a bad deal on that one. They went, oh, we're going to lose a little money on this one.
So let's try to get to the bottom of this. Like, what is the point here? Seriously. No, I mean, like, what is the purpose? You're buying houses. Now, obviously, they expect to make money somehow in this. They're not doing this
logically
for the fun of it. Okay?
We would think.
So
I'm with you.
How are you making money buying houses for, 20 grand above market value?
Right, and so interesting. So the final thing I'll say in this story is that I told my clients, you got to close before 580 closes. So you got to push for that. So we countered and just play the dumb homeowner and say, oh, my mistake. Can we do 7 days? They did. They asked for 7 days. Redfin said 14 days. Great.
So they got
do
it.
And so they got 14 days. Both properties ended up closing the same day.
Oh my goodness.
So the 600 and the 580 both happened on the same day. Here's my opinion. You ask, why is Redfin doing this? Here's my opinion.
What's the point?
What's the end game? Redfin is in the Steve Ploetz team of the market is improving, and they got burned on a few, but they believe it's still a great time to buy. The market's appreciating.
And why are they selling the one in Shadow
I'm
Ridge
with
for a
you.
loss?
That one's stupid. They should hang on to Olympus Loop, that property that we're talking about, and they need to wait, in my opinion, 6 months.
That's it?
In order to, I mean, to me,
That's pretty optimistic, Mr. Optimistic.
I bet $100 on Oceanside. I think September or October of last year. It was around there. I'll have to go back and check.
Yeah, we will have to go
I
back and check.
stand by even with the fall and winter being tough, the spring is going to be.
Spring is definitely heating up. We'll talk about that.
Spring is
But I'm
coming.
trying to figure out what they're doing here. I mean, like, what's the point? Because they're buying these cash. It's a company that hasn't been profitable yet, so it's not like they're sitting on huge banks of cash. So what's the point? Is it just to try to keep the Redfin sign in yards out there? I mean,
you need so much money. Think about it. If the average sales price is $600,000, you do
let's say 500,000.
500,000. You do 10 transactions, so you get to put 10 Redfin signs out, you need $5 million. You do 100 transactions, you need $50 million. $50 million for 100 signs of property that you're putting back on the market, and with this Olympus Loop, the $600,000 deal, at best they break even.
Well, that's what I'm saying. So that could be the model. I mean, this could be a loss leader situation. It could be a situation where you say, hey, listen, we know we're going to go into this, we're going to try to break even.
To do what?
That's what I'm saying, to get signs out.
To put signs out?
Yeah, to get listings, because obviously when they go to sell this home, they're going to get the listing, right? So
They better. I'm going to create my own Steve Ploetz buy it now. I'm going to call them up. I'm going to backdoor my way in.
okay, you guys can buy it, but I have to list it. Let's write that in. I mean, like, so they're going to get listings. They're going to get signs in the yard. They're taking this buyer, and who knows what's happening with this buyer, but obviously that is a pretty good experience.
$50 million for 100 signs so that you can get 100 more, so you can get some branding. That's a bad business model.
But not if you break even. If you break even, it's way cheaper than buying ads on
the
TV.
risk is too high.
I agree, but I don't know what they're doing.
Yeah, otherwise, why would you spend? Let
I'm
me tell you,
trying to come up
Redfin,
with logical.
if you have $50 million, we can put it some other places where you don't need to break even.
CDs are paying 4%, by the way.
Right.
But I mean, like, I don't get it. That's why I'm trying to figure it out, because obviously my first thought was, okay, this is like the Zillow Make Me Move thing. It's like, this is for investors. This is,
Right.
you know, they're trying to somehow connect the buyer here, but no, they're the buyer. They're buying it cash. They're buying it quick. They're buying it for at least fair market value. The same thing perplexes me about CarMax. By the way, if you ever have a car to trade in, don't trade in your car. If you ever have a car to sell private party, do not sell it. Sell it to CarMax. They will pay you more money than you will get on the private market. They will pay you more money than you will get on a trade-in, and they'll do it like that. You drive up, and within an hour, you're out of there. It's crazy. But I've never understood why they were willing to pay so much and make it so easy. But their cars are priced a little bit higher. So anyway, I never figured that out. This I'm now trying to figure out. What the heck do I not know about the exchange of money and, you know, how you could buy it? So just to recap real quick, Redfin purchased this house. This was a deal that Steve was going to get the listing on, and his clients found this little thing over here in the bottom right of the screen where you can see where it says RedfinNOW. Sell the RedfinNOW, hassle-free, no repairs, showings, or uncertainty, and they give you a range. Well, Steve was telling them that, hey, listen, there's a model match that I talked to an agent. It's pending right now down the street. Here it is. And it did sell for $580, as the agent let you know. Got some little insight on that one. And so Steve is telling his clients, gosh, you know, prices have changed a lot. $580 they're going to be the new comp. And Redfin offers $600. And then they come through. They come through.
I know we have a good episode when Derek uses that next octave.
I mean,
they come through.
They came through with $600,000. And it's not, here's the interesting thing. It's not showing here, Steve, so why not? What in the world is going on? Why do they want to acquire homes? Are they renting these places to someone? Are they Airbnb-ing this stuff? Are they just going to turn around and sell it? I mean, what's going to happen to this house now?
I can't imagine that Redfin is getting into the property management business. And at $600,000, I mean, we could figure out what you need in order. 1% of $600,000 is what? A net profit of $6,000. So I need $6,000. I mean, it's ugly. My math isn't right there.
No, 1% is correct.
Yeah, $6,000.
But I don't know why you're talking about 1%.
Well, I'm just trying to figure out, like, as an ROI, what would you need in terms of, but there's better places to put your money. My expectation is what Redfin is looking to do is to flip it. But we are looking at this going right now. This is a bad deal if you're a flipper. Forget the whole Redfin.
Period.
We have zillions of dollars. We're pretending that we have zillions of dollars to invest. Derek, if you came to me and said, "Hey, Steve, I want to flip a property and I want to buy this property at $600,000. What do you think?" I say, bad deal.
Yeah. Well, that's my point. So what is the deal here? Like, is it to create transactions so that you can make the numbers look good for Wall Street? Is that what the deal is? Like, because there obviously is, a situation where it's a publicly traded company. They need to show increasing numbers, movement, action. They need to show signs in the yard. They need to say number of listings. That those data points now really matter. How many listings did you guys have this quarter? How many homes did you sell? You know what I mean? Like, those are questions.
And we just
that are
won't worry
getting
about
asked.
profit and loss.
Well, that's already out the window. They've never made a profit. So that's not a question. I just don't know what they're doing with this. But case in point, here, just like I've been sending people to CarMax since 2012, because I found out that CarMax is willing to pay you more for your car than what you would get on the private market. As soon as I found that out, here's the model match. I immediately started sending people to CarMax. Now, if you're a seller, do you have to go look and go through this process and see, like, what's the deal? I mean, is it going to be smarter to sell your house now to Redfin because they need to make stats up for Wall Street? I don't know.
Let me just tell you, since I was around in 2005, if that becomes our model where we're going, like their model is, hey, let's just buy a bunch of losers, let's overpay for them all and put a bunch of signs out, then this market is propped up in some bad ways.
Agreed. We can talk about that next, though. Thank you for agreeing with me already. But the thing, I thought about the same thing with CarMax. I was like, well, why don't I just go private party, purchase a few of these vehicles that I know CarMax will buy for $2,000 more. Yeah. I'll just buy it from this guy over here, walk the bill of sale down to CarMax and go, what do you guys give me for this thing? I thought about the same thing. So it could be an interesting situation. Let's get to a couple comments here. Benny Charles, what's up, baby? He says, this is gold. Benny, you are gold, brother. Would love to hear your thoughts on this. Norm Brand said, what's up, Norm? He said, Redfin bought 3773 First Avenue number 3 at $444,500. Have had it for 6 months. Carry costs, okay, he's adding that up in there. Now selling for less than that significantly, $399 to $420. Wow.
Yeah.
Subtract 1% closing costs, subtract another 2% agent co-op. So easily a $30,000 loss. Yeah. And see, and that's the thing. So how do you justify that if it's not a marketing expense? You know what I'm saying?
Yeah.
So if you're Redfin, you have to look at that and go, okay, well, we bought a house from someone, so we made someone really happy. Like, those sellers have better be ecstatic.
Oh, they are. Especially when they found out that their neighbor was in escrow at 580.
And they got 600. So the seller, those people, they're through the moon. Like, wow, they must be thinking, Redfin's amazing. This is great. They're giving away free money. All right, so you are winning someone over with that. So there's something to be said for that. And then you're also, you get a listing.
I would love you if you overpaid for my property too.
Obviously.
The interesting thing, to interrupt you, is they actually said the whole time, Steve, there's some funny business going on here. Something, it doesn't sit right. We're not, and they, of course, because of the way it was renegotiated, they had 14 days and then they did a lease back. So they said, obviously we don't need to pack up, but I'm not counting that this is a deal until someone says.
Until the wire comes in.
Yeah, until the money is
But
in
the wire came in.
But the wire came in. To answer Tanya's question, Tanya asked, so did the owner have to pay Redfin 7%? Yes, they did.
But it comes off the transaction just like commissions.
It comes off the transaction just like commissions. So, I mean, so from my standpoint, and in the same with the 580 deal, whether Brooke had it at 5%, 6%, 7%, that came off the 580. So in essence, yes, Redfin is trying to protect themselves a little bit more with their risk fee and their convenience fee. But when I looked at it as a listing, I'm charging a full commission. So the difference there, and I'm saying.
So they are making something up there though, right?
Because they are making something up, yeah.
Because, they're, as the buyer, you normally, the seller pays.
Absolutely.
All that stuff. So they're still kind of having the seller pay that, but then there's no agent fees
So
involved.
$600,000 minus 7%, that's $42,000. So you can make the argument, in essence, they're buying it at $558. something like that. But then to turn around and sell the property with a model match that closes the same day at 580.
Even with the 1% listing fee, let's say 1.5%.
So then it's, and then you're offering 2.5. It's 3.5, 4 with closing costs. I mean, now you're
close to break even. But that's my point, is that it could be a break even strategy to get a happy client, signs in the yard, transactions on the spreadsheets for Wall Street.
It's so much risk for a sign in the yard.
But it's not just a sign in the yard, though. It's a happy customer. Look how ecstatic your clients are with the fact that they did this.
So let me ask you, to interrupt.
And the sign in the yard. I'm not going to let you interrupt me again. You already did it once today, and that's the end of it.
There's going to be 4 more.
The sign in the yard is also something. There's also a chance to make a profit.
And there's also a chance to make a loss.
Yeah, true. But you can call that a marketing loss if you have a happy customer, a sign in the yard.
You keep going to this happy customer. Do you think, and I know you don't know these people, do you think that the next time that they would buy or sell, and granted they moved actually out of the country, or they're going to move out of the country, do you think that they would now call up Redfin and say, hey?
I'll say the likelihood is higher than it was before.
Well, that I agree with.
Especially when they sell next time. They're going to check that again.
Absolutely.
There's no doubt about that.
Yeah.
So if you want to change the way people do things, sometimes you have to go out on a limb and maybe do something different and something risky. This is definitely it. Again, I don't know if this is the end game. I'm just waiting for you to tell me how it's not. So good question, Tanya. Yeah, it comes right off, just like the commissions would. So net to the seller is minus that 7%. So what we say, 568? Is that right?
No,
558.
558. Because it's 40. Yeah, 7% of 600,000 is 42,000.
So it's basically the same as a cash offer from an investor directly to a seller for 558.
Correct.
That's the net.
Yes.
Okay. So that doesn't
that
look
would be
as bad.
558 cash for sale by owner, no agents.
No agents. Okay. So even though they offered 600, but the way the sellers are looking at it is, well, hey, we were going to pay.
We're going to pay it anyways.
We're going to pay it anyway. So if we're going to pay it at 580, we paid it 600. We got a great deal. Redfin's looking at it like, well, we got a house for 568 that we know is worth 580.
558.
558. Dang it.
Changing these numbers.
And it's 580.
Yeah.
So really,
and here's my opinion with that one. They didn't think it was 580. They thought, per their Redfin estimate, they thought it was 658 or whatever it is that we pulled up.
It was, hold on, they thought the Redfin estimate on that one was 652, but the model match across the street with
they don't know about this
was
one.
595.
Okay, so I'm with you. That they go, okay, this one's 595, but this property, the property in question, at 650, you write them 600, even without the convenience fee. Yeah, it makes sense.
Do you think they're making this bet on the Redfin estimate tool, and that's what they're betting on?
The short answer is obviously I don't know, but I can't imagine that Redfin, a nationwide company, has boots on the ground that are picking up the values of every single one of these. I think they have an algorithm.
But at some point, some human being from Redfin has got to look at this. I mean, this can't be.
One time, they had a human being walk through the property. It was either once or twice. But I'm pretty.
So they sent a person.
They sent a human.
They sent a human. So
no robots.
Someone had to look. Yeah, there wasn't a drone just flies in. Oh, the Redfin drone is here. Still 600. Greg, what's up, Greg? He says.
Well, Redfin lower the. Well, everything's negotiable, and that was something that we talked about.
Good question.
We the sellers and myself said, well,
did they negotiate? Did they counter at all?
The only thing that they countered was
the time frame.
On the time frame. And they said, we want a lease back and we want a quicker close.
They could have possibly negotiated a better deal.
They could have possibly negotiated and said, hey, remove the 1% risk fee. And this was a conversation that I had with them. And I said, take the money and run. First of all, at my opinion at that time, I don't think they're going to perform. Truly, I don't think that they're going to go all the way, because they're going to look at the market and look at this and go, ooh, that was a good thing that we saw it quickly, because whew, let's dodge a bullet and get out of this one or renegotiate it with. And yeah, the sellers could have played hardball and removed the risk fee or brought the convenience fee down from 7% to 6%.
You know what? I wonder why the Redfin estimate is so much higher on this one. Like, what is it factoring in? Is it because the 1 year, this one says built 89 and the model match comp was 88.
Oh, so they're all of a sudden they're
1 year newer? I mean, what is it picking up on?
Here's the quote for today. You ready? Because these estimates are bullshit. That's why. Because these estimates are inaccurate. That's why.
Well, this one wasn't too far off. 595 to
Oh,
580.
the 595. Yeah, the 650 though is kind of.
This one, yes. This is the subject. Now, again, keep in mind they have not updated this. This sold for Redfin bought this for 600.
Right.
So it's still saying 545. I'm assuming that's what they bought it for.
Right.
Originally, and so, but they bought it for 600, but their net after the 7%, 558.
Right.
So we got to keep that in mind. So they.
But then they're going to turn around and they're going to have to pay fees in order to do it. So, I mean, they're going to have to pay fees in order to list the property, not just commission, but also closing costs. Even a binder, even a property that you're flipping, which you pay
costs.
less title
I
insurance.
get
There's closing costs are going to be involved. There's going to be
Cost of sale is gonna be-
$5,000 worth of closing costs in that, on top of the commissions.
There's going to be a total, if Redfin lists this and sells it 4%, let's say total, there's going to be 30 grand at least in closing costs
And at
here.
558 plus 30 grand, that means you need 588
To
in
break
order
even.
to break even. And we just said a model match at
The
580
better view, yeah,
with a better view.
is at 580. But what do you think about the market right now? Like,
Oh, now we're cooking.
mean-
now we're cooking, huh?
right, it's spring, there's action taking place.
There is action taking place. And the market has, here's my opinions on the market. September, October, November, December, January were hard months
Stunk.
for everyone in the industry. For
Rates came
agents,
down though recently.
Rates came down to the lowest that they have been in a year, and now all of a sudden there is situations of multiple offers. Today, driving here, have a client in Carlsbad. I know I gave you the address. Property in Carlsbad listed, and it's listed at $985. He asked my opinion. We saw it on Saturday, the first day of showings. I said, come in strong, come over asking. They had 10 offers. They countered 6 of them. They said highest and best over $1,030,000. We came above that, didn't win it.
Didn't
We
get it.
came $50,000 over the asking price and didn't win it.
Well, let's lay this out real quick because Carlsbad, obviously hot area, been growing a lot the last 10 years. And here's the property that's actually in question. As you can see, it's a hot home here on the Redfin website, and Redfin estimate on that one, by the way, is a $111. So
Yeah, so now they're a little bit
1,011,000.
on the low side.
a little low on this one, yeah. Which but this is pending, as you can see. So they have accepted an offer. It was listed at $985. You offered $132.
Over $1,030,000.
Over $1,030,000.
It opened today, so I don't want to give away our number just in case they do.
Come back.
I'm hoping that I'm not hoping ill will. I'm hopeful that their transaction goes through and that buyer is very happy. And if it doesn't go through,
You get the call.
I'm hopeful that they call us and say,
Well, it's a great listing. So, I mean, you got just 2,400 square feet, 4 beds, 2.5 baths, and I'll show you some of the pictures here. I mean, it's dope. Like, this is a sick pad. Now, it's Carlsbad 92009, right, which is the southeast part of Carlsbad,
Correct.
La Costa area,
Right.
right? So, but you got ocean views here, dude. I mean, this
you
is
got an ocean,
sick.
you got about, I mean, what you see there on the left-hand side, that's the ocean. You're
Yeah.
not looking, as you look,
But just as a view, that's a sick view.
it's a sick view.
You're gonna get
elevated,
sunsets, bro,
You're going
like,
to get sunsets.
It's going to be something.
There's
And you-
chickens next door,
nice big yard here.
3 of them.
No pool, right?
No pool.
But it's updated.
They've updated,
It's fresh.
and yeah, but built in 1974. So I mean, obviously there'd be some things that we would want to check in terms of plumbing, electrical. No, it's a kick-ass property.
This
It
is
is a great property.
Really cool. The views, you get the
Opened
expensive
up.
windows. Yeah, this is dope.
They've done it beautiful.
So I just want to say, like, as we get into this discussion, this is a sick home. Stuff like this, priced appropriately. And one of the things, by the way, especially for agent friends out there listening, this is a hot home. And one of the things that I notice almost always about hot homes, and I don't think this has a huge bearing in the algorithm, but I just noticed it, is that the listing price on hot homes is almost always under the Redfin estimate. Almost always. Now, I don't know if that's a self-fulfilling prophecy where, the buyers who are looking see that it's priced under the Redfin estimate and therefore they look at it more because they think it's a deal. I don't know if that's the reason, or if it's just that if it's under the Redfin estimate, then typically that means that it's priced very aggressively and buyers are more apt to look at it more often, because I know that the stats that they're getting, the reason why it's hot is because people are looking at it and they're coming back and looking at it again. They're looking at all the photos, and that's what they're looking at to determine if it's a hot home. So I do know that, but I don't know what the correlation is directly, but I will tell you this, it is a great conversation piece in a listing presentation to say, hey, you want to be a hot home on Redfin? Okay, let's go look at the hot homes on Redfin and see if there's anything we can notice about all of them. You know what I mean?
Yeah.
Like, I mean, and look at what happened. Look at what happened. On this particular property, they listed at $985, underneath this Redfin estimate, got offers far and above the Redfin estimate. And it's my whole next event, actually, that I'm doing later this month, probably early next month. I don't have it exactly nailed down yet, but I've got the content. It's all about the listing price. And how to explain to people, because we live in a culture that doesn't negotiate or is uncomfortable negotiating, and people think they need to list the price at what they want to get, because that's how we grew up, that's how things work.
Right.
And there's a whole psychology to it that I'll be breaking down in that event. But the point is that this happens when, if you go and look at all the hot homes on Redfin right now, you'll find about 95% of them are listed beneath the Redfin estimate.
And in my opinion, with what's happening in the market right now, good product, good homes that are fixed up, move, and move quickly.
And that's the point that I was going to make with this, was this house is sick, and it was priced well. You add those two things together, I don't care what sub-market you're in. Like, it's going to work for you. That's going to work out. If you have a house that is dialed in like this, and you price it at a place where you're not being greedy, you're not misunderstanding the use of the listing price, and you're under the Redfin estimate or something just slightly, my goodness, you're going to have all kinds of action. But that's not every property, though.
I agree. And
there's a lot of crap out there.
And too often, that's what we're seeing. Is the market right now is in a very interesting place where we're getting this jaggedness of some sellers. What they want to do is they want to list a property too quickly, in my opinion, and not fix it up and just throw it on the market and, hey, let's see what happens because our neighbor sold it at such a great price. And this market, even more, it requires that sellers be patient, that they fix it up, and that they list it strong. I have a listing right now that I'm going to throw you a curveball here because we didn't prep this one. Okay. 1387 Temple Heights.
Let me do this real fast for Norman. What's up, Norm? So he said, so what's the difference? Like, why? You know, he said Redfin's website states a 7% service fee. It's actually 6% plus a risk fee, right? So it's a total 7%. Yeah. So what's the difference? Pay a realtor, or pay Redfin this fee? And that's a great point that you're making. And in this particular example that we were using, was that Redfin was actually willing to pay, and they bought this house for 20 grand above the previous comp.
Right.
So even if you balance out the fees on both sides, the seller still had a win there.
And what I told them, the benefit of moving forward with that Redfin offer was, if Redfin baited and switched, if Redfin tried to change the deal, nobody would know. You wouldn't have the stigma of being in the MLS, going pending, and then going back active. And in this market that is riddled with fear, every buyer going, what's wrong?
Yeah.
Looks like a good property. Why'd you fall out? Is there something wrong with the property? And then it creates this stigma. So the thought was, hey, let's do it for a short time period with them, a week if we can. Okay, they want to do 2 weeks? By all means, let's do 2 weeks. If they perform, fantastic. If they don't perform, nobody knows.
No one knows. That's a really good point, too. There's no risk.
There's little risk, especially for 2 weeks.
Yeah.
2 weeks is little risk. 60 days,
more risk.
More risk.
So what was the
1387 Temple Heights.
Okay.
A little dead air here is my
little oceanside action.
Little
This is pending, 2-bedroom.
So this is pending, and so same thing. This gentleman called me up and said, "Hey, Steve, this place was crap." I love you, Dave. If you're listening. So he inherited this property.
Okay.
And it was a rental for like 25 years. Peacock Hills, and
looks nice. 2-bed, 1-bath. Listed at $359.
So, and it was terrible inside. And so what I told him was, look, you can leave it as it is, and you can. My opinion, we listed at $309.
Did you on purpose put Indiana Jones on the TV? Is that something the photographer did on purpose?
They were saying that's Long John. Hi-ho, Silver. I'm wrong.
Wrong generation.
Wrong generation. But so I said, look, here's what you can do. You can list it as is, and what you're going to get is sit on the market. And this part right here, the kitchen that you see, and there's probably another picture. There should be. It's been opened up. It was a galley-style kitchen. Now we're looking from the kitchen. It's a tiny little place. It's cute, but it's on the right there. That used to be washer-dryer, and it used to be all closed off. And so I said, you can list a property like this and list it as is. And of course, this is in a 55-plus community, Peacock Hills. So that's a demographic. There you get to see where the washer-dryer was. 55-plus demographic typically doesn't want to come in and start gutting stuff. They want to move into something that's move-in ready. So you're going to get a bunch of investors, a bunch of flippers that are going to lowball you. Or spend 20 grand and you'll get it back twofold. So he says, I trust you. I'm going to run with it. Let's see what happens. Here's 20 grand. We gut it, put it on the market at $359, gone in a day. One day, multiple offers.
Wow.
And that's, and I think that there are so many sellers that feel like, I don't want to put the money in because it's not worth the, I don't want to follow bad money with more bad money kind of thought.
But this one is now pending, right?
Right.
2-1 listed just above the Redfin estimate there. But although, well, actually, I don't know if it would show that it was, yeah, it would show if it was a hot home. But it sold very quickly. They don't get them all right. So
all my listings are hot.
Well, now you know the trick. Now you know the trick. Yeah. So to sort of summarize, we still have no idea why in the world they're buying houses.
We've been talking for an hour and we have no idea.
But do you have a better theory?
Do you
have a better theory than mine?
I think there's too much risk to do it for purely putting signs in the yard and branding. If what we're saying is Redfin needs 588 in order to just break even, and they've got a model match that sold at 580, if they lose $15,000 as a company to put a sign out, I would say bad deal, bad business decision. But I think probably what they are expecting is they believe, as I do, I bet $100 that the market is going to improve. They just bet $600,000 that the market is going to improve. We are thinking alike. They just have a little deeper pockets than,
You really think that they're buying it because they believe the market's going to go up and they're going to sell it for a big profit? That's what you really think? That's the game here.
The game certainly can't be they're expecting to buy all these properties, risk huge money to put out some freaking signs.
Why not?
Because that is terrible business.
But it's not if you are graded on market share and
Right.
number of transactions. You got to understand, the management is being oversighted by Wall Street, investors,
Right.
shareholders.
Right.
They're looking for certain things to get better. They're looking for an increase in market share. They're looking for an increase in number of listings. They're looking for an increase in transactions. There are a lot of those deal points. You would think it's just profit. It's not. If it were, the stock would be worth zero. Okay? But it's worth more than that because they're looking at growth. And they've charted this path of growth. So one of the things Redfin has done, which has been truly remarkable, is that they have grown significantly countrywide a real estate brokerage. That's pretty impressive. But they've done it on the heels of not making a profit. So, but their excuse for that has been, well, hey, we're taking our revenue, we're reinvesting in growth. And Wall Street's okay with this. You know that, right? Like, Wall Street's cool with that. I mean, Lyft just IPO'd this week. Did you see that? They haven't made any money. They're losing tons of money. And same thing with Uber. But look at it. They're going to go public and make billions. The world's just weird when it comes to that in business. So with Redfin, they have certain data points that are really, really important to them. And I know that for a fact, market share is very, very important to them. I know for a fact that number of listings that they get as a percentage of the number of listings in the market is really, really important. And I got to tell you, the sign in the yard isn't the purpose, but it's a nice consequence.
It's like if we're talking about the Padres and we're talking about their team batting average and their on-base percentage and how they don't commit any errors, but they haven't won a freaking game, it's bad business.
It doesn't matter, though. It doesn't matter if it's bad business. I'm just trying to get at the root of why.
I'm with you. I'm as perplexed as you are.
I'm perplexed, unless that's it. That's the only thing I can think of that makes sense is like, hey, well, let's stack the deck. We have money, right? So let's stack the deck. Let's accumulate houses. Let's buy houses. Let's make happy home sellers. Let's create a relationship with someone. Let's maybe make a profit, right? I'm sure they didn't intend to lose money on this deal, and they may not.
And
if
to
they
me, that's
sell
the
it
big-
for 600, they will make money.
And to me, that's the big thing, is that we're working under the assumption that they're like breaking even on every deal. We just had a conversation here. Was it Norman that was talking about that, hey, here's another example where they lost money. I was talking about looking at a listing that's currently on the market where they bought it for more than what they're trying to sell it at. They are losing money on many of these transactions. I don't know how many. And as it's right now it's a small sample size. When I looked a couple of
And
weeks
maybe they'll
ago,
stop doing it.
it was like 35 deals or something like that. My expectation of probably what it is that they are dabbling in it right now, because we're talking about one market, and San Diego, as we've talked about, is a lot of local independent
Very
markets.
dynamic,
But
yeah.
we're talking about the San Diego market. If they're doing 30 of these in 50 different markets throughout the United States, and they're losing money or breaking even, this is a bad deal.
Maybe they're doing it so they can figure out what markets they can make money doing this in.
Oh yeah, that's a trial and error. Well, we lost a bunch of money over there, lost a bunch of money over here.
But think about it though, even the one we're talking about, the one that they purchased, we'll go back to it, 1676 Olympus Loop, which they bought for 600. Right. We know the model match 1697 Olympus Loop sold for 580. But we also know that their 7% was baked into that. So they're actually into this one, 1676, they're into this for 558. So if they were to just turn around and sell it for what they bought it for, 600, they're in the black on that. Now, it doesn't look like that would be doable right at this second, but if the idea is, well, if we can just buy it for the price that we ultimately sell it for, then we're safe. If we just don't buy bad, if we can just avoid making bad buys, which I know we've showed a few examples here so far, but I mean, if that could be the strategy, like, hey, let's not make a bad buy. Right. Let's buy these things right. We've got a Redfin estimate tool. We've got other tools. We're going to send a physical inspector to go look at it from our company, make sure that there's not some big problem there. If we can get that situation for us, then we have kind of a free roll. We get the sign, we get the happy customer, and we probably get a little.
You're so big on this happy customer thing that
it's important.
No. Believe me,
happy customers are important, Steve.
I understand that a happy customer is important. I'm just not sure that if you overpay me for my car, that now all of a sudden that makes me want to use you the next time.
It's gotten me talking about CarMax forever. Forever.
Right.
I mean, for the past
because
years.
Arguably, I'm not going to put words in your mouth, but arguably you look like you feel like CarMax is a sucker. I feel like in this situation with Olympus Loop, Redfin was a sucker.
Well, no, not necessarily. We don't have to call people names.
They overpaid for that property.
Possibly.
Look at the comps. It closed the same day.
I'm not saying CarMax is a sucker, but I am saying that they'll give you a better deal. Now, I'm assuming everyone's a big boy here. So, I'm not going to call someone a sucker if they come into it, disclosures, blah, blah, blah.
Absolutely. They did it all correctly.
You do it, it's buyer beware. Like, look, if you ended up paying more than anyone else would have for this, then that's on you. But you're not a sucker necessarily, right? Like a sucker would be like, hey, Steve, buy this working microphone from me,
Right.
But then you're a sucker. So I wouldn't call them a sucker. But CarMax is just, they're paying more for cars than I could see anywhere else.
CarMax is never going to buy my car now, or neither is Redfin is never going to buy my house. No, I'm out
You
here.
should try it.
Yeah, right.
But like this one right here, you see this one says, because it's not pending, and any one of these ones that aren't pending, it'll have this on there. It still says 587, 659. So I think they're sticking with a strategy where they feel like they've mitigated their risk significantly with the 7% and with the fact that they're getting to the client before they're on the market. But I feel like it's very interesting where they started, because this offer wasn't really negotiated. Only the time frame was negotiated.
Right.
So they started at 600.
Right. They didn't lowball. I mean,
They definitely didn't
even
lowball.
from their range there, which said 587 to 640 or whatever it was, they came in above the bottom of their range.
Yeah.
And maybe it's set up that way so that they can go, hey, we're not coming to the bottom dollar of this range. We think the
But
value's here.
they pulled no funny business.
They pulled no funny
There was
business.
zero funny business.
With all the name calling that's been going on, I do respect that they completed the transaction and have completed other transactions. And I was expecting going into that transaction that there was going to be all kinds of funny business. Because as a realtor, I am tainted by flippers that are all funny business. Hey, we're going to write you an offer at X, and then by the time and then 19 days later, they write you an offer that's way below it. Or they actually do write you that offer, but they're not going to put earnest money in, and they want to have the opportunity, and then they renegotiate at the 11th hour because they're not emotionally invested in it. This property, Olympus Loop, is a beautiful home in a nice neighborhood. And I thought the demographic that would buy it would be owner-occupied. So when you sell it to an investor, it can create some anxiety just because an investor doesn't care about all of the emotional things in the transaction. They're looking for it to pencil. And in my opinion, what they wrote it at doesn't pencil.
It doesn't pencil, but it was good for your client.
It was good for my
So, and they pulled zero funny business.
They pulled zero funny business.
In fact, they expedited the client here, the seller, negotiated the term, the length of the contract,
Right.
and got it down to 2 weeks. They performed no renegotiations, no, hey, we got the inspection back.
I think there was a very mild renegotiation when it came to, they did a physical inspection, but I think it was a few $100s. But it was not a significant renegotiation.
Okay, so zero funny business.
Right.
The seller did well here.
Yeah.
And now we just have to see what's next.
And I think that's what's going to be most interesting. Now we sit and watch and see, is this a model that Redfin is going to try to go from 30 homes in San Diego County to 300, 3,000 homes? Or do they take a bath on it and close down that program, and from now on when we look at Redfin, when we pull up Redfin to check your home, that RedfinNOW is completely gone away? Or
I think you underestimate the value of the signs in the yard, because when you're a big company like this, keep in mind, it's not just a sign in the yard, like a Steve Ploetz Century 21 award sign in the yard, right? It's different when Redfin has a sign in the yard because they have all this real estate on the internet,
right.
on Redfin. Like when you look, if I do a search right now, which I can do, if I do a search right now for a home, and let's just say, let's just call it San Diego, California, and I have no parameters in here, notice right there on the screen, look, everything is too zoomed out except for what? One listing, that's Redfin. So they're able to drive, traffic to listings that is different than, because they ultimately want buyers. Right? I mean, that's the game. A discount broker wants buyers. They use the listing as a loss leader to get buyers and make the commission on that. That's really that's the game of a discount brokerage.
And that could be the game plan but if you're going to lose $15,000, $20,000, I mean, and I agree with you that perhaps they've miscalculated on this one, or hoping that the market increases. Certainly because of the lease back, they're not going to be able to list that property for a couple of months. Arguably, the market is going to improve over the next couple of months, and they're coming on the market. Today's April 2nd. They're going to be coming on the market May, June 2nd. So, I mean, that's the heart of looking at the demographic of who likely would buy that. It would be a family, maybe somebody.
Could work out.
That one could work out. And then I get to eat my words on
this
program. However,
I'm going to shred down a $100 bill and put it in a smoothie.
No. The $100 bill, I would win because I still believe. I still believe.
I'll tell you one thing. I'm going to favorite this one right here. Boom, because I want the updates on 1676 Olympus when that thing goes back on the market. I want to get an email on that. We will be tracking this thing, and we still have no idea what's going on. But it was a fun conversation with Steve Ploetz, ladies and gentlemen, who is doing extreme detective work, sacrificing commission, laying on grenades, and everything else that we could possibly ask him to do out in the field. Thank you so much, my friend.
Thank you.
Great to see you. And share this video with your friends. Make them smarter than everyone else. Come on, you owe it to them. They need it. You can help.